and welcome to Dinis Guarda, Cities ABC and Open Business Council series. We are a fast-growing YouTube and podcast thought leadership channel focused on profiling the global leading inspiring people, CEOs, authors, technologists, academics, and people that are framing and creating a new vision for our world, and especially looking at solutions, how we can actually get better results for the problems that we are facing. In this channel, we've been actually highlighting ideas, products, inventions, software, books, and solutions to the multiple challenges and opportunities we face in our cities and our society. But we face especially, and we actually profile special people that are inspiring, people that are doing fantastic projects, and people that are trying to transform our world, with all the areas and all the challenge from fourth industrial revolution to blockchain, AI, and all the frontier technologies that are disrupting and as well accelerating our evolution as humanity. These podcast series are produced and distributed on citiesabc.com and openbusinesscouncil.org and syndicated on intelligenthq.com, fashionabc.org, edgefink.com, and tradersdirect.com, our associate partners and as well media platforms. Today we have with us Robert Sharratt, that is the Managing Director for Crescofin SA, a Geneva, Swiss company that is a financial, very interesting cutting edge company that makes a new revolutionary approach towards institutional banking using blockchain and DeFi technology. So Robert, welcome to our series. I'm particularly interested to know about your new product and about a bit of your background.
Hi, Dinis. It's so nice to chat with you.
So, Robert, I want to start straight away. So, a bit as a managing director and as well someone that comes with a very strong financial background and banking, a bit of your history and banking history and as well education, because I think I always like to contextualize the person and the work that people are doing. And I know that Switzerland has a very special context when it comes to trading and investment and finance.
Sure. Well, my background is an investment banker. So I did mergers and acquisitions in emerging markets when I was a young investment banker. So after business school in London, I worked in Russia and I worked in China for a number of years. And then later I worked for a Wall Street firm doing M&A in Europe. And then I moved to Switzerland to kind of manage my own money and make investments. I particularly was interested in technology because I'm also into coding. And I also was looking for a lot of ESG type investments. So that's the origin of Cresco.
Very interesting. So let's go through Cresco. So tell us about Cresco. I know quite a lot about the company, but people listening to us, they don't know. So let's start with the company first, and then we go to the product.
Well, Dinis, Cresco is quite simple, actually. It's an alternative to a bank. And so what we do is, like, our objective is to replace banking with code. So we're built on a blockchain tech stack, and we can get into the details of how we operate. But the output, the benefits, is that we offer an insured savings account as an alternative to a bank account. And we pay, for example, 3% in US dollars, and it's 100% insured, whether you put like $100 with us or $100 million. So essentially it's a bank that is really designed and built for savers.
So very interesting. So in terms of the regulatory context, can you tell us a bit about that? Because being a Swiss, of course, it's always more prestigious. But how do you set up something as innovative as that, especially like you said, if you run a bank on code? So a bit of that context.
Well, Switzerland's a funny country, you know. It's at the same time very, very conservative, and it's safe and stable. It's why, like, you know, a third of the world's offshore wealth is here. I mean, it's just an enormous, like, you know, money management industry. But at the same time, you know, Switzerland has no natural resources, and it has a decentralized political structure, which I think it makes it more attuned to a technology like blockchain, which itself is decentralized. So the country has decided that it's going to embrace blockchain, it's embrace this open, transparent technology. The laws in Switzerland are really clear. You know, compared to some other countries, like in the United Kingdom, you've seen crypto, anything derivative related having been banned. You see in the United States, a lot of uncertainty about the legal situation, and then it varies, state by state. So yeah, we're regulated in Switzerland. You don't have to be embarrassed about being a blockchain crypto company. We're very clear with our regulator about what we do with our bank. Lloyds of London has looked at like how we operate, and they provide insurance based on our blockchain operations. So yeah, so it's actually really cool to be one of the few fully regulated companies in in the blockchain space. So we do everything a bank can do except create credit, except create money, which is of course not what we want to do anyway, because it's not our model, and it's borderline morally questionable that banks can create money. So we do everything else except that.
Can you tell us how do you use blockchain and as well all the new trends of DeFi in your product? Because Crescofin, I think you call it Crescofin, the product, is precisely using, like you mentioned, blockchain and the DeFi, that is decentralized finance, to actually replace a very traditional product, but with a much more innovative product. So can you tell us about the way you do it and why, let's say, should I put my money with you guys? Because I think it's an important thing as well.
Well, Dinis, we actually didn't approach it from a pure tech perspective. Like a lot of things are developed by these amazing, tech entrepreneurs, and that wasn't how we came to it. We actually came to where we are today by being kind of pissed off by what we were getting in the bank. Interest rates and savings rates went negative in Switzerland a couple of years ago. I mean, they're also negative in Japan, throughout most of Europe. The Bank of England has recently announced that they're going to explore negative rates coming soon to the United States. So, when rates went negative in Switzerland, we went a little bit, bananas. We're so annoyed by it. So nobody really likes their bank, and nobody particularly likes to have their money in the bank and then the bank charge them to hold the money. I mean, it just doesn't make any sense. So a couple years ago, my partner and I, who's like my oldest friend, PhD in engineering, super intelligent guy, we sat down and we thought, okay, how can we build this for ourselves? I mean, like, if we were just to reimagine things and we were to like cut out the bank, how would that work so that we can, because banks are profitable, I mean, so it was in the mid 90s that Bill Gates said banks are dinosaurs. And there's always been this idea that tech companies are going to compete with banks, but it's never really happened. You get some things with fintechs nibbling around the edges, but nobody has challenged core deposit banking. So we thought, how will we do it? And you really quickly come to the conclusion that the only way to do it is through blockchain technology, is through crypto, because it's just a revolutionary change in the technology. No longer do you have like old siloed, in-house black box databases, SQL databases, which are essentially banks, which rely on information asymmetries. I mean, that is totally swept away with the idea of having like an open, transparent record book, which is the blockchain. So that's what we do. So on both sides of what we do, which is essentially the deposit side and also the finance side, we rely on blockchain. So on the finance side, what we do is, Dinis, every business relationship starts with a contract. There's always a seller and a buyer, and they're selling something, a good or a service. And what our technology does, which is really cool, is we take that old world contract and we transform it into a smart contract. So the seller and the buyer both agree that, essentially the delivery of the good or the service goes through this smart contract mechanism, and the delivery is recorded to chain. So there can be no dispute that a good or a service was delivered. And then it's just a question of normal business terms. So the buyer says, I give you whatever, 30 days to pay or something like that. But since it's recorded in an open, transparent way, what the seller is in the position of doing is essentially getting finance for for their invoice, which is produced by the contract, which is really cool because a lot of sellers have difficulty getting finance. They're, usually, the small guy, the buyer's the big guy. And so what we do, since it goes through our system and it's very transparent, we pay after delivery has been confirmed. So we have proof of delivery, the buyer agrees it's been delivered, you're just waiting for the credit terms. We pay the seller essentially to buy their invoice at a discount. So we buy it at, say, 95, it gets paid back at 100 in, say, 30 days. And it's really cool as well because the invoice is produced by our software. It's produced essentially by what is recorded to chain. So it's really a novel approach. It's a novel use of the technology. And I think it's going to completely change, seller-buyer relationships because you cut out disputes. Since we produce the invoice, you cut out fraud. You're just reliant on essentially the promise by the buyer to pay. And what we do is we've taken all this, we've taken our software, how it works, essentially, blockchain, to Lloyds of London, famous for being like old-fashioned, stuffy, financing ships and stuff like that. And it's not at all the case. I mean, they were really, they were really amazing. They really were like, okay, we see the benefits of blockchain. We see, I think when people get into blockchain technology, I think they see it's like the internet in the 90s. Like it's totally gonna change business relationships. So the fact that it's essentially all in one giant open record book, and then you just take the credit risk against the buyer is insured by Lloyds to 100%. So regardless of what you deposit on, on our savings side, you're 100% covered. And then the deposit side is also recorded to chain. So it's just very clear, like you've deposited this amount of money, it's done, and like it's done separately, remote from Cresco. So you don't take any credit risk against Cresco. You can transparently see in real time where your money is, how it's being used. On chain, you have like, you have the insurance coverage. So it's really amazing. So, as excited as I am about technology, because I'm kind of a nerd, what you get at the end of the day is the benefits. Because, crypto and blockchain, we spend way too much time fascinated with the back end technology. But real users, like our users today are, institutions in Switzerland. And what they're really interested in is the benefit. So, they get 3% in US dollars and it's completely insured. So that's the summary of of how we came to blockchain.
So just by curiosity, so well, there's a lot of people trying to do similar things, but what they're trying to do is really cutting edge. And I know that you come with a strong investment banking and trading experience, and so does your team and your partners. So how, just for the sake of probably the skepticals, how do you explain the part of Lloyd's, the insurance? Because that's a big problem right now, especially with the capital markets are all crashing and we have these amounts of debt, and no one knows actually what is going to happen because of things are still going crazy with coronavirus and all the debt that is being created. So how do you leverage this insurance with Lloyd's? Are you trading to make sure that you facilitate the 3%? Just a bit of context on that for the people that probably will want to know, because of course it's a great offer you have here.
Well, the great thing about it, Dinis, is it's not really tied to the financial markets in the sense that it's a real economy product. So what we do is we plug into, real world industries. So we do staffing, we do soft commodities, telecoms, these kind of industries that are just generating attractive returns in the real economy. Like it's not like, it's not something where you're going to invest and you're going to make 100 times your money. It's a boring product. I'm a boring guy. It's insured. The idea is to be an alternative to a bank account, and that's what we're trying to do. So we don't source our funding from money markets, or things like that. I mean, today things are so distorted. Like the yield curve is, things are so completely distorted today. With government essentially printing money, keeping interest rates low. You know, Dinis, what it's really led to for the last decade, like since the great financial crisis, you know, what it's led to is like a decade of a war on savers, essentially. Like, I mean, the reconstitution of banks, you know, balance sheets is being financed by savers, because in the real economy, as we've shown, you can cut out the bank, you can do match funding. If you do this with this, you know, technology approach on blockchain, where you cut out disputes and frauds, you can easily make, you know, you can easily make 3% as a saver. As a company, of course, we also make a very healthy margin. I mean, not huge, but like, you know, we're profitable, savers are profitable, like the buyers get buyers get a much better deal than they would get through other financing means, like for, you know, I mean, sorry, buyers and sellers. I mean, it's much better on the financing side. So everybody really wins. I mean, except the bank. I guess the bank doesn't win, but you know, it's just in applying this, you know, this incredibly innovative technology, you know, you get like, you know, you get so much more out of it as a saver, because you're really plugged into the real economy. You avoid the distortions that exist essentially in liquid markets. So
I understand, and it's really very interesting. And I think I never see this versus against the banks or whatever, because you're coming from a bank background. It's more like an innovative, and probably I'm sure that you're going to have clients, banks clients, probably in the future if you're successful on this. So
well, it's interesting, Dennis, you say that, because you know it's actually most interesting to smaller banks that themselves don't have like a big lending portfolio, or a lot of the private banks here in Switzerland, you probably know, they don't lend, they just take in deposits. So what it really allows us to do is to be the first technology company that can really compete with core deposit banking. And we do it partly because of this, you know, this really cool, amazing, cutting edge technology called blockchain. But at the end of the day, the real benefit is that it's insured. It's actually kind of disappointing, because in a sense that I love the technology. Like, I mean, I think replacing banking with code is like, you know, really compelling idea. But when we take it to clients, we're mainly like family offices here in Switzerland. You know, I explain the whole details of the whole thing. And then, you know, my partner basically says, look, it's 3%, it's insured by Lloyds, how much do you want? And the bank says, you know, great. And you know, it's also a really traditional product in the sense that it has an ISIN securities code. It's quoted on the Bloomberg terminal. Like, you can easily allocate it as a traditional guy. You can easily allocate it to your, you know, to whatever your portfolio. It's the first blockchain crypto DeFi product that is quoted in the real world. So yeah, so it's really exciting. But at the end of the day, users are really just interested in the benefits, right? It's like Netflix or something. You know, you watch Netflix because you just want to be entertained. You know, you don't think of like streaming packets. You don't think of the transport layer. You don't think of the back end. It's the outputs that are the most important.
And I think that's the more important thing for me, at least especially for our cities, because I think sometimes, although I'm a technologist like you, and as well a person with a lot of different areas of technology and background and fintech and so forth, the most important thing is the end goal solution that you're providing for the clients. And I think that is the most important thing. If you don't provide a solution, you don't have a problem. You don't have a product, and you don't have actually a solution for your clients. So another question I have right now. So you finance the platform with the security token, and you are in the process as well of going still through that. Can you tell us about that? Because it's quite innovative, but I know as well that is Switzerland is quite a lot of things, from ICOs right now to STOs. A bit of that context and the way you've been building this part more innovative around the Crescofin.
Yeah, sure. Well, actually, we didn't really finance it from like any capital raising. For the last 2 years, my partner and I have financed it ourselves. So we built it for ourselves. We're not very good business guys, obviously, because we weren't thinking of like how to build a business and sell a product to third parties. Like I said, we were just pissed off. We were just irritated with like not earning anything on our money in the bank. Well, and then in Switzerland having to pay for it. So we built it ourselves. We paid for everything ourselves, like the software build out, the team, the regulatory process, etc. And then we started testing it with our own money from the 1st of October 2019, just to make sure it worked and to get out any of the early stage bugs. And to make sure we didn't like risk anybody else's money. I mean, if there were losses, you know, we thought, well, we'll take those. So of course there were early stage bugs. We've worked those out. And then in the spring of this year, so in May of 2020, we opened to local Swiss institutions. So we're regulated. It's a regulated product. We do our own in-house KYC. And we have a number of, you know, Swiss family offices that are starting to use the product. I mean, the amounts are still small. It's still trialing it, you know, but it's going pretty well. And so just recently, like just this month, you know, just this week in early December, what we did is we became the first regulated company to offer real equity tokens in crypto. So we're enamored with DeFi. I think it's going to change the world. I think it's like, my favorite quote about us, which is really kind, is from Damien Horner, who's the co-founder of Real Vision. And he said, it's like working with Amazon in the early days before anybody knew who they were. You know, I hope it's like that, of course, but it's just, the space is in its real infancy. So we're experimenting a little bit. So we've offered these, you know, equity tokens on a decentralized exchange in crypto. So people for the first time can have exposure to, you know, it's like buying shares that are tokenized in whatever, your favorite tech company. And we're really excited as well to be working with some really cool, you know, DeFi crypto partners. So we have a partnership with Aave, and Stani, the founder of Aave, is on our board. We have a partnership with Chainlink to secure our real world assets, like to secure that data on chain. So yeah, so we're being really experimental. And the fact that we financed it all ourselves and didn't take any third-party funding, didn't take any money from VCs, we're essentially letting the community be the early investors in this and get the early investor prices. So yeah, so it gives us a lot more freedom to experiment and have fun. So that's what we're doing.
No, very interesting. It's just so to understand. So as you just mentioned, so you're offering a security token and a decentralized exchange. So can you just tell us exactly how do you doing this? Because I think it's interesting for people who can listen to us. And then I want to have two other questions more on DeFi, but this one is particularly interesting.
Essentially what we do is we tokenized our shares. So we have 10 million shares outstanding. It's a Swiss regulated company. We've got like 10 million equity tokens. We did it through using a really cool open source software called C-Layer. It's under MIT standard, and the founder of C-Layer worked with us to design it. It's the first, you know, real major offering of you know, equity tokens in DeFi. The only thing is I'm not very good at like promoting it. You know, crypto's hard to figure out. You know, there's a lot of like people pushing products that are like, you know, and companies that are like, you know, that maybe are not regulated, that are trying to do some stuff that like are not exactly like ours. But anyway, we're experimenting. So we're trying it. So we've got two aspects to the token. One is, and it exactly matches Swiss law. So what's traded is called the WCRES, that's wrapped CRES token. And anybody can buy it. It's like buying a share of Nestle on the Swiss Stock Exchange. And then to be officially registered in the books of the company so you can vote and things like that, you just simply swap your wrapped equity, your wrapped CRES, you swap it for CRES token, which is a heavier token because it has all the voting functionality. So WCRES is designed to be easily tradable, it's optimized to have low gas usage, and it's composable throughout DeFi. So yeah, so I'm you know, it's an experiment. I'm really excited about it. We're really 100% committed to DeFi. I think DeFi, distributed or decentralized finance, is going to completely change the world. I mean, you know, you see, even just yesterday, I noted that like Aave, who's one of our partner, just released their version 2, and they have this money market. They have this money market product that's extraordinary. I mean, it's just gonna, it's totally gonna change money markets in my view. So yeah, so these are our partners. This is what we're doing in DeFi, and we've opened it up now so anybody can participate.
No, congratulations, and I think it's quite innovative, and I think it's interesting as well, because what I like is you are a conventional, although you're criticizing the bank, you're conventional banking using innovative tools, and I think that's the way probably should do, because if you just have technology driving finance, you might get into another bubble and having another problem.
Dinis, I'm like cleverly disguised, right? Like I have gray hair and I wear a suit and tie, and we have like, we're on the Bloomberg terminal, and like, I mean, I am a former banker, recovering. I'm taking pills to get over it and stuff, but I think you need to bridge both worlds. I mean, you definitely can't just be stuck in the traditional space and like ignore blockchain. That would be a disaster. That would be like being a newspaper in the 90s or a bookstore or something and just saying, I'm going to ignore Amazon. Like that's a crazy strategy. Also, you can't just be in crypto and ignore the real world. So what we're really trying to do is to be a bridge between both worlds. Clearly, to create financial products, you need to be regulated. If you're going to be regulated, you want to be in Switzerland. It's the best country in the world for regulation. And then for managing money, I mean, Switzerland's a really, really serious country. I mean, people can envisage sending their money and trusting a Swiss company, regulated, like seriously controlled. I mean, I don't think you're going to send like your money just anywhere in the world to some tech company. But what underlies it all as well is it's 100% covered by Lloyds, by the insurance. So.
No, and that is very innovative, and I think that's the most interesting. So, cautious of time, so I have my last 2 questions, and actually they're based in 2 articles of yours, because I think you touched this without a particular intent. So you wrote recently on your Medium channel that you're going to put, of course, attached to this interview. Why do we still use banks? Banks are dinosaurs, and DeFi is the meteor. So I would like for you to elaborate about this, because I think it's particularly interesting, and as we are, of course, I'm provoking you as well. Of course, I'm quite innovative and revolutionary, and I've been both in the 2 sides of barricade. I created a bank as well, and I've been as well involved in banking, but I think I'm much more interested in the innovation part. And like you just summarized, blockchain is just there. You just cannot ignore it. And being as well one of the ambassadors of blockchain worldwide, I'm particularly interested to make it happen. But a bit this, and I think about the DeFi part, because there's a lot of myths around DeFi. There's as well a new bubble around investment in DeFi products. I know that you're not part of that because you are doing really serious things. And I like the way you do it, because you're using the innovation part of the tools to make people having money and getting saved money, not to create another risk, financial risk. We have enough of that. We have a history of a lot of stuff. But about this article, and especially why you think DeFi is the meteor, although you touched that, but a bit more deep.
Well, I definitely think that's the case. I think that banks are dinosaurs. Lots of people think that. That's what I was saying Bill Gates said in 1994. The question is the real question is why are they still around? Because you don't get a lot of value from your bank. People statistically, in polls prefer to go to their dentist rather than go to their bank. In terms of value add, banks are always ranked at the lowest in terms of customer satisfaction. You work hard for your money, and your money should work hard for you too. And in a bank, it just doesn't work for you. It works for the bank. But, so why do I think DeFi is the meteor? I think simply because it delivers more benefits. And, in finance, Dinis, everything boils down really to risk and return. And so with crypto, with blockchain, you can deliver a much higher rate of return and with the same level of risk. And so we offer, for example, 3% in dollars, 1.5% in euros, 1% in Swiss francs, and it's 100% insured. So the benefits really are the meteor. And what you need to compete is, there's 2 things you need to compete with banks in my view. One is you need to be regulated, because no industry on earth is as protected as banks. I mean, regulation, people talk about KYC, they talk about like money laundering, and those are all terrible things. And, you should genuinely do KYC on people. I really believe that. for financial products. You know, for Bitcoin, money, or whatever, just like cash, that's different. But if you're selling them a financial product, I think you need to do KYC. And anyway, it doesn't matter what I think, because you just need to be regulated to offer that. And that's what we do. And the second thing that you need is you need insurance. And this is where our real innovation comes from. So our insurance is predicated on our proof of delivery mechanism on chain. It only would have been possible because of Ethereum, because of public open blockchains. And you know, that is what has enabled us getting insurance. And you need insurance, Dinis, to counter, to neutralize banks' psychological advantage. Because just colloquially in society, you know, it's in the bank, it's safe, you know, everybody conceives of like having their money as in the bank as being safe. That's why people don't send their money to like Apple and Google and other tech companies. So, you know, what we do, because we're built on a blockchain tech stack and because we have insurance from Lloyds, is we neutralize that psychological advantage. With us, everything is completely insured. It's regulated, it's based in Switzerland. And so, yeah, our intention is to replace banking with code. We're going to do it for institutions and individuals, and we're going to do it globally, and we're going to roll it out in mass next year.
Fantastic. So I think my last one. So you wrote a book that is in Amazon Kindle, and as well you've been writing a lot about banking and a lot of these areas. So one of the last articles that I'm particularly interested as well, because we always try to context global trends and global different things, and I think bear in mind what you're trying to do is fantastic, and we're going to put notes. And I think especially you can guarantee something. You're using one of the biggest insurance companies in the world to assure that that's quite innovative for a small fintech player that is starting. So you wrote recently as well about we are going through coronavirus, and of course there's a lot of concerns in terms of precisely all the debt and all the different things around money. But as well, you are in Switzerland. So one of your last articles was Swiss private banking in the age of coronavirus. So I would like to ask you, how do you see this? Because you are creating an alternative to lending. In the end of the day, you're creating a saving bank. Let's put it that way. That's what you have. So I think when you criticize banks, I think you should say some banks, not everyone, because in the end of the day, you are a bank as well. So how do you see this part of the private banking in the age of coronavirus, or in general, the banking industry in coronavirus? And as well, of course, you touch on DeFi, but as well, because in the end of the day, we need to have different compartments. So you are right now, Crescofin is focused on lending and savings with the insurance legality and using the technology to create a product that is fantastic and faster and more transparent. But a bit about that overview, and as well what you've been writing in so far as a thought leader and as well as an entrepreneur.
Well, Dinis, thank you. I appreciate you reading some of the things that I write. You never know if anybody really reads it, and it's banking. It's a bit boring. So, my book is the philosophical underpinnings of our company today. So my book is about the 1% and the 99%, and it really gets into the technical details of fractional reserve banking. And my idea is that fractional reserve banking leads to wealth inequality. It's just an inherent aspect of fractional reserve banking. And fractional reserve banking is inherently dishonest. I mean, it's based on a couple of fundamental lies. One is that the money is yours when it actually really legally belongs to the bank. The other is that you can have your money back whenever you want. People have this conception of banks and putting their money there like it's Ocean's 11, like it's like your money is carefully taken into some back room of the bank and put into some huge, enormous steel vault, and it's just safe and there for you, which is not at all how banks work. I mean, if you really understand how banks work, I use an illustration in my book of it's like an inverted triangle. It's essentially an upside down house of cards with the fractional reserve at the bottom. And Cresco is exactly the opposite of that. It's matched funding. It's designed to be honest. As a saver, you know exactly where your money is at all time. And where's your money? Well, it's put to work in the real economy. And it's not really exciting. It's the safest way you can put your money to work. and then on top of it, it's 100% insured. So, you know, for Swiss private banks, I mean, I wrote that article because, you know, Switzerland is full of private banks. I mean, one of the problems with doing a job like mine is that I meet people in Switzerland and they say, what do you do? And I say, well, I'm going to replace banking with code. And people look at me like, you know, you're in Switzerland, man, like pull it together. Like, it's like trying to find a replacement for chocolate or something. But, you know, you're right, Dinis, like, I'm not critical of all banks. I'm actually critical just of fractional reserve banking because I just think it's based on a lie. And I know this from like being intimately involved as a banker in how the inside of the system works. Swiss private banks don't do that. They don't do fractional reserve banking. I mean, they don't really do very much. They don't really do lending in that sense. So the future for Swiss private banks, you know, unless they adopt technology, isn't a very good future. I mean, rising regulatory costs. I mean, there's a lot of declining margins. You're increasingly just tied to like the performance of the stock market. So, you know, my suggestion when I wrote that article is that Swiss private banks should really embrace technology. It's like the early days of the internet. I mean, the solution for Swiss private banks is that they should capitalize on their great reputation, the fact that they're in Switzerland, like a really safe and stable country, they're regulated. They essentially should use what they have and combine that with technology. They just have like a world-class opportunity. So that's my idea, that the future for, and not just Swiss private banks, but you could say that money managers globally, to get more for their clients' money, they need to adopt technology. I mean, I've written a couple of other articles as well, like for wealth management, asset managers, like institutional money managers, they need to embrace blockchain technology for very selfish reasons. It's because that's how they're going to get a higher return with the same level of risk for their clients. And if you don't adopt it, you're a dinosaur. You're at real risk. So that's my idea. I think that blockchain, I think, you know, my prediction for 2021, Dinis, is that blockchain will lead to mass institutional adoption of crypto. And at the moment, people think of crypto as like the Wild West. They think it is very volatile. They think it has some suspicious things happen. It's exactly the same as the internet in the 90s when people said, oh, the internet is full of pornography. It'll only be used by pedophiles. I mean, it's just all the dirt that you get thrown at an early stage technology. And early stage technology also does attract a lot of dodgy characters, unfortunately. So, but out of that comes Amazon. You know, I hope out of that comes something like Crescofin, because, you know, it's the first time in history where it's really been possible to challenge like core deposit banking. And that's what we're going to do. And it's an enormous market. It's a $60.5 trillion market, according to the Bank for International Settlements last year. And that's what we're aiming at.
No, I think that's a great vision, and I respect that a lot. And I respect as well your thought leadership, because I think it's very important to discuss and actually put this in written, both with the books and the writing parts as well, with your YouTube channel. So last question, and I think just an overview. So as you offer your token and with your securitized token for people that want to buy it, what exchanges is available? Point one. And then the last part of this, that is actually two questions, is you will touch crypto, and crypto of course is a big thing. I know that you're going to offer as well in Crescofin stable coins in the near future. So tell us a bit about, so point one, where can you find your token? And for the people listening to us that want to invest, or at least do, of course, legal disclaimer, this is not any advice, but I think that want to understand more where to find it and read about it. And then second, how do you see the crypto industry and the DeFi tokens coming out of this, especially the securitized tokens versus the industry in large? Because at the moment, and it's a paradox, is that it's becoming mainstream. So we have the major banks right now having 10-20% of assets in crypto, ironically, and the Bitcoin. So this is no longer just, let's say if you would be talking 2 years ago, I would have to be careful not to, especially if I talk with the bank, not mention anything about crypto blockchain. Now everyone is on it. from JP Morgan, they were actually some of the more criticals to the mainstream ones and so forth. So just need 2 questions to finalize.
I think that's right. I think that's absolutely right. You know, Dinis, I'll deal with the second one first because I'm like I really love technology. I love finance. I'm like slightly autistic. I mean, I just like, I really like the details. I like building things, and I'm like terrible at marketing. So I don't, you know, I mean, I hate promoting, you know, the company, but, you know, and also there's so many people that are really good at promotion and maybe not as focused on building in the space. So, but, you know, we'll get there. So, but let me answer the second one. I mean, you know, crypto is mainstream now. Like you're really behind if you're in finance and you're not looking at crypto. Like, I mean, you should be scared. You don't want to be the corner bookstore that closes its eyes and thinks that Amazon is not coming. So we saw a huge change in the spring after Paul Tudor Jones, the famous fund manager, announced that he had Bitcoin in his portfolio. I mean, you know, the way finance works is quite funny. A lot of people compete with indexes. They try to outperform indexes. Most people are actually mainly concerned, like any industry, they're mainly concerned about preserving their job. It takes lead steers. It takes people like Paul Tudor Jones for fund managers, or Michael Saylor for corporate treasuries, or Fidelity for institutional fund management, to say that they're doing this. And then others follow. And so in the spring, we saw a huge uptick in interest about crypto. Like, I mean, you know, Switzerland has always been very advanced. They've been very clear that they're going to embrace this new technology, you know, open, transparent, decentralized, you know, so that was enormously helpful. And, you know, so it's not difficult to explain it to institutions now because people want to know. Like, people are actively interested. There's a lot of mainstream press coverage, so that's really useful. And essentially what we're doing is like, it's the, you know, blockchain's the back end. Like, people don't care that much. You know, people care about, like, people are selfish. They care about what's in it for them, risk and return. Like, you know, if I can get it like completely insured through Lloyds and I can get a much higher return than in a bank, that's what they're interested in. That's just us. You know, in DeFi, they have this funny term called money Legos. So, you know, a bank is, you know, it does everything, right? All singing, all dancing, provides like a one-stop shop. DeFi is the opposite. DeFi basically is you can choose what you want. You know, old legacy banking is like buying a record or a CD where, you know, all of the songs are just on that CD or whatever. And like, you know, DeFi is this, like, you know, the iTunes store where you can make your own playlist, where you can choose like all the different songs that you want, especially for you. So our money Lego is the bottom of the pile. I mean, it's the boring base layer. It's like where you can put your money kind of unthinkingly, and it's completely insured and it's really safe. That's what we do. And then there's other, like, you know, amazing parts to it. You want to do derivatives, you look at synthetics, you want to do, like, you know, money market stuff, you look at Aave, you know, I mean, all of this is secured on chain by Chainlink, which is like this incredibly like serious reference company, and it's done in a decentralized way. So we're just excited to be part of this new ecosystem, I think. And it's just, it's going to sweep the world. Like, we're going to, like, our software basically is going to allow somebody who's in South America or the United States or Asia on their phone to basically be able to send in, you know, fiat, because we operate in fiat, or stable coins. To be able to send in, like, you know, USDC or DAI or whatever, and essentially earn a 3% rate of return. And we're also starting where we've got a proposal to develop a insured regulated money market on Aave, which is, like, I think, one of the coolest protocols out there in DeFi. So this is all coming. And, you know, for us, you know, the details of how you can basically invest in us and participate in our equity, you know, which is in a digital form, open to anybody. You can see it You can see it at our website. Everything's there. It's DeFi, DEFI dot CrescoFin.ch. So.
Fantastic. So I appreciate, I think it's a great insights you have here. And I wish all the congratulations for the work you've been doing and the success as well, because we need platforms that make a bridge very down to earth, but as well that works. And I think especially that's the vision of blockchain technology and DeFi that you just mentioned. Thank you so much, Robert. And well, good luck for everything.
Thanks, Dinis. It was great chatting with you.
Cheers.